Hello and welcome back to Underdog Investing. So today I want to cover the topic of Bitcoin and the Bitcoin price, and I also want to go through a CNBC article covering Bitcoin and just run through it because I found it quite misleading and I just want to clarify a few points from that. Before I dive into it, I'll be very grateful if you can like the video and subscribe to the channel. Thank you. So starting with the Bitcoin price, you can see that over the last few days it's had a quite significant drop. So around 25% drop from around the highs of like 41,000 all the way down to around 30,000. Now, I found an article from CNBC and a lot of other news outlets have similar articles which I found very misleading. So I just wanted to go through it and I've decided to go with CNBC. Starting with the title, Crypto Investors Should Be Prepared to Lose All Their Money, Top UK Regulator Warns. So I find the title itself very misleading because what do they mean by crypto investors? Because there's lots of different ways people can invest in cryptocurrency. For example, you can get sensible people who would buy Bitcoin and Ethereum and probably leave it in a cold wallet and let the value of their assets grow over time. And then you can get other people who like to speculate on alternative assets, so what they call altcoins, for example Dogecoin or XRP, and these things are very volatile, so they're already generalizing and I'm not too keen on that. Moving on to the key points. People investing in cryptocurrencies risk losing all their money according to the UK's Financial Conduct Authority. So the other thing to say about this is that cryptocurrencies can be volatile and it can be risky to invest in cryptocurrencies. But the same thing could be said about the stock market. I mean, if you invest in things like Apple, Facebook, and Google, which I see as like the Bitcoin equivalent in cryptocurrency, it's not very risky, and you're not going to lose all your money in it. But if you invest in something a bit more risky, such as penny stocks, then you can potentially lose all your money. Similar to cryptocurrencies, where if you invest in alternative assets, like for example Dogecoin, you could potentially lose all your money. So I think it's a bit unfair to just generalize and say cryptocurrencies you can risk losing all your money, because you've got things like Bitcoin which are a lot less volatile than the alternative coins. So moving on, the regulator's warning comes amid wild volatility in the cryptocurrency market. Bitcoin and other virtual currencies plunged on Monday, wiping off 170 billion from the entire crypto market. Now, there's two main things to address here. Firstly, 170 billion of the Bitcoin market cap is not significant when you compare it to the recent rally it's had over the past month. It's actually gone up around 120% in the last month, so around a 20% pullback is not very significant if you look at the bigger picture. The second thing to mention is that 170 billion off the market cap might sound quite scary, and a correction like 20 to 25% might sound quite scary, but I am quite reassured that this particular rally is very different from the 2017 rally. And the reason why I say that is because of the way it's driven. So the 2017 rally was driven more by retail investors who had a lot of fear of missing out. This particular rally was driven more by smart money. So people like Kathy Wood of ARK Invest have invested in Bitcoin. People like Michael Saylor of MicroStrategy have invested in Bitcoin. People like Paul Tudor Jones have invested in Bitcoin. People like Square, Jack Dorsey have invested 50 million in Bitcoin. So these kind of smart money players are a lot less risky than retail investors. And anytime there's a dip, you can see them taking up all the Bitcoin. Even something like Grayscale, I think they're purchasing more Bitcoin than is being mined at the moment. So any kind of opportunity, they're straight away grabbing up all the Bitcoin. So that's why I'm less worried about the volatility and less worried about something like a major crash that we saw in 2017. So moving on, London, thinking of investing in cryptocurrency, be prepared to lose all your money. That's the message from the UK's Financial Conduct Authority, which on Monday warned investments and lending products related to crypto come with very high risks. So reading this, I personally think that this should have been the title, And this is actually what the FCA were talking about. So I feel like the FCA had good intentions. What they're trying to say is that if you take your cryptocurrency and you put them into like these lending schemes, a lot of the schemes out there could be fraudulent. And if you do put your money in these, it can be very high risk because they're scams and you could potentially lose all your money. But what happens is these news outlets take these statements and they turn them into things like this. Crypto investors should be prepared to lose all their money. And then people just read that title and get very scared. So this is what annoys me a little bit. Okay. The FCA is aware that some firms are offering investments in crypto assets or lending or investments linked to crypto assets that promise high returns. Now, as I said before, personally what I do is I buy my Bitcoin and Ethereum and I put it into a cold wallet and I leave it there for storage. I don't put them into any lending or investment schemes. Those are things that I try to avoid, as the FCA has actually given us advice to do. And that's the very reason why I avoid it, because it can be very risky and you can potentially lose money if you put your money into something which is fraudulent. So actually, I think that's good advice from them. So moving on, if consumers invest in these types of products, they should be prepared to lose all their money. The warning from the FCA comes amid wild volatility in the cryptocurrency market. Bitcoin and other virtual currencies plunged on Monday, wiping off some 200 billion from the total value of all cryptocurrencies combined. As I said previously, from the recent run-up, nothing is sustainably going to constantly go up. So it's very normal to have a pullback when you see a massive rally like what's been happening in the crypto market. So Bitcoin surged to new records last week, climbing as high as 41,000. Investors increasingly view digital asset as a hedge against inflation, similar to gold, in times of unprecedented stimulus from governments. Now this point is very important, and Bitcoin's new narrative of being able to replace gold as a store of value is actually something that I'm quite keen on, and I quite like that idea. Just from my personal experience, so I work as a doctor by trade, and recently when I was treating a patient, I think the patient was around 11, 12 years old, I asked him what he wanted to be when he's older, and he said he wants to be an investor. And I said, what kind of investor? So he said he wanted to invest in Bitcoin. Now, that was like a light bulb moment to me, because at that moment I realized that if I had asked a million other children if they would invest in gold, I'm sure none of them would say they would invest in gold. But if I ask them about Bitcoin, I'm sure there will be a big bunch of them who know about Bitcoin and are going to invest in Bitcoin. Now, this is the up and coming generation. Wherever you get attention, that's where the money's going to flow. So this is, like I said, one of the light bulb moments for me in terms of investing in Bitcoin for the future. So moving on, but Bitcoin's wild rise has led some commentators to warn it could be a market bubble likely to burst soon. The world's most valuable cryptocurrency has skyrocketed over 300% in the last 12 months. Bank of America, in a recent note, called it the mother of all bubbles. Okay, so I feel like I've addressed this point already. The regulator is clearly concerned that the high risks already inherent in crypto assets are being compounded by scam activity, as well as unregulated firms targeting consumers with marketing material that highlights the rewards, but not the potential downside of investing in crypto assets. So this is actually quite a fair point, and it's quite a fair statement, so I'm not really going to say too much about that. So yeah, so I just wanted to address some of the misconceptions or some of the misleading comments from these news outlets. And just to summarize, personally, the points that I got from this is that I personally would like to invest in the safer cryptocurrencies like Bitcoin and Ethereum. And secondly, when I invest in these cryptocurrencies, I would like to transfer these into cold storage, so using a hard wallet, and just let them grow over time. And the other point is that I would try to avoid putting these cryptocurrencies into investment schemes which could potentially lose you money. So those are the main points. And if you enjoyed that video, I'll be grateful if you can like and subscribe, and I'd love to hear your comments down below. And if you found it useful in any way, I'll be grateful if you can share it as well. Thank you.